Why did Germany demand their gold back in 2017? I mean, they didn't get it then. Why did they start the ball rolling? Why did JP Morgan? Because everyone's rolling up their sidewalks and being careful. And that means there's less contracts available. And whoever the poor guy is with the short silver contract, 10 expirations from now, is going to have to make delivery. And they're going to get screwed. That's it. It's happening. It's happening. You don't have to worry anymore. It's happening.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Hope you're having a great day out there already and ready to dig into some more analysis of the gold and silver markets with Vince Lanci of GoldFix Substack. Played part one of our interview with Vince yesterday, and in part two, he digs into some of the other comments from Zoltan Pozar's recent research, talks about the central bank gold buying, as well as who may have been selling the gold, why they may have been selling, and also gives a preview of some of the things going on with the Federal Reserve, especially with their meeting coming up tomorrow. So a lot to dig into in this episode. And with that said, here's part two with Vince. In the midst of all of this, we see Saudi Arabia meeting with China. They didn't have the friendliest reaction to when Joe Biden showed up there recently. You just see this trend growing. Now we're seeing, like you mentioned, with Ghana actually using gold as money. Now Zoltan is writing about it. He's not the leader of one of these countries, so that's his opinion versus necessarily what might happen yet. Something it ties into something else you mentioned, which perhaps we'll get to in a minute, of where the gold was coming from that all of these central banks are purchasing, because obviously if someone is buying the gold, someone is selling it. And again, you touched on a little bit of that with some of these gold flows that are going on. Although I wanted to also get your comment. Here was the other highlighted comment from Zoltan's note. Russia's decision to link gold to oil could bring gold back as a settlement medium and increase its intrinsic value sharply. Banks active in the paper gold market would face a liquidity shortfall, as all banks active in commodities tend to be long OTC derivative receivables hedged with futures, an asymmetric liquidity position. So thoughts on his comment there amidst what we see of a world that continues to de-dollarize, and it's not just what we saw 10 or 20 years ago when it was saying, well, one day this might happen or one day people are going to get tired of it. We're seeing it now. So with that context, your thoughts on what he mentions here?
Well, I mean, everything you said, everything that we've talked about, separately and together, over the years before we knew each other, it's happening. It's happening right now. And I think just about the metals community, I think we're a little slow to be comfortable with it because we've always had this other shoe drop, at least since the 90s. And I'm telling you that there is no other shoe. It's happening. It's happening. But specifically about that, that's him talking about commodity collateral, right? So when he says Russia's decision to link gold to oil could bring back gold as a settlement medium. Okay, the first thing I did was actually writing about this. Like, I really drilled down on this whole sentence. Settlement medium. What's that? What's a settlement medium? I looked it up. There's no definition of settlement medium. It doesn't exist. What does settlement medium mean? I'm like, what is it? Medium of exchange? So I finally found the phrase medium of settlement. And where does it exist? In the Uniform Commercial Code. And that is the term that they use for medium of exchange. That's their term. It's a legal version of medium of exchange. It's called medium of settlement. And it's a phrase that the Federal Reserve uses. And who used to work for the Federal Reserve? Zoltan. So settlement medium is a nice, fancy, semi-convoluted way of saying currency. That's what it means. So if gold is a store of value, right? And I say gold, I mean silver as well, but we'll get into that in a second. If a precious metal is a store of value for all the right reasons, you can just leave it there, right? And that, by the way, that's why they're deflationary, because you don't have to use it. It doesn't demand to be used. It's not going like, use me. It's happy the way it is, right? But what happens when the store of value, which like, okay, well, I have to sell it. It's like my, it's like my art, right? It's art, right? In fact, that's what they did with gold and silver. They demoted them from money to collectibles. I have to sell my piece of art to get some cash to buy some tomatoes, whatever, right? Well, now they're saying, well, the guy who's selling me tomatoes he'll just take the gold. He'll take the art. Well, it's not art anymore. It's gold. It's money. It's silver. It's money. So what ends up happening is, if it becomes a currency medium, and this is the beauty of it, that people do not understand this, and they should really understand this. If the ones who are all about reserve currency dollar really need to pay attention, because it's a reserve currency dollar, because it's a currency, because it's needed, because it goes from place to place. Gold and silver that are stacked do not go from place to place. They're a store of value, no doubt about it. But you and I mean, to the extent that I'm comfortable with, I'm not, but let's say I am. I'm comfortable because I only view gold and silver as a store of value, as either on display, right, or in a vault, or custodially somewhere else. I have a great relationship with my custodian, let's say, right? Okay, but now I can use it to buy stuff. Well, I need it. I need it because I don't need to borrow against it at 7%. It's like, I need it. I'm going to take a gram of gold out of my custodial vault. And now all of a sudden, what am I doing? I'm taking delivery, not because I'm a hoarder, not because I'm a stacker, because I'm using it as currency. Now, literally, we're not taking a gram of gold out, but it's kind of like this. Ghana's going, okay, where do I send the gold? Where do I send it? It's now become a settlement, a medium of settlement, which means it closes the contract. I want to buy tomatoes. You give me the tomatoes. I give you the gold. The transaction's over. That's it. Everyone's satisfied. And you're like a stone's throw away from that happening in silver. So what he's saying is, because of every gold stacker's, he's saying that he's a stacker. He's saying that if there's 300%, whatever the number is, 500% outstanding of derivatives in the world, if they were to as a claim on above ground silver, I don't know what the number is, right? Well, then somebody's going to get killed. And by the way, I think this has been going on, especially in silver, over the last year. I have more confidence in this. I mean, I've had confidence in it before, but I don't want to just openly speculate. Somebody short silver and has been leasing it to cover a short position in something like SLV. This is my opinion, but it's going to make a lot more sense now. Okay, so why did the EFP go over futures, which we talked about before? Well, people want the silver. Yeah, why do they want the silver? For coins. Well, not that much silver. Somebody's covering a short. Somebody's sourcing silver to cover a lease short, which is why SLV rallied, which is why it led. SLV led for a while there, which is why the EFP, it led even though the EFP was negative. Anyway, I'm jumping all over the place, bringing it back home. If you need your gold to buy tomatoes and I need my gold to buy tomatoes and they've got our gold, well, now we're going to take it. Now there's 5 futures contracts against that gold outstanding there. 4 of them are by a bank and they're using it to do carry trades, rehypothecation. But now they've got to close. They've got to close those because now there's no gold left, or exaggerated, there's no gold left. What ends up happening is, for the last year, I know this has been going on. We've been seeing, probably since 2017 in gold and since 2020 in silver, we've been seeing the hot potato. I'm short, and I know this because I've done delivery in silver, and it's a hot potato. I was like, I don't want this. I kept doing that, right? The hot potato is, this is the beauty of precious metals, and I can speak directly to this about silver. I took delivery of silver once, more than once, but the one time I took delivery that was educational was, I said, I'm going to take delivery. Big shot, right? So I took delivery on the futures exchange, and I said, when do I get it? Where is it? And I was totally like an idiot. And I was like, well, we don't know if you got it yet. Like, what do you mean you don't know if I got it yet? It's like, and then I got an education. The long declares first. The short has time to fill the long. And so the short, so you and I are both playing. We're both shorts. We're both producers. I don't have the silver. You have the silver. I don't have the silver all. And then what we do is we go into the futures exchange and we cover our short. And now someone else has the hot potato. And it just keeps getting rotated and rotated around. And every expiration, some contracts come off. This is post Basel III, right? Every expiration, some contracts get retired, right? And I borrow silver from him to make delivery. It's like I'm borrowing, and the leases go up a little bit. And now you've got this less and less musical chairs is what I want to say. But now you've got this hot potato. But instead of 50 guys passing a hot potato, it's now 2 guys. One of them is smart and one of them is dumb. And the one who's dumb is going to be holding the hot potato. And the hot potato is a bank that blows up. Now, I don't know if a bank will blow up, but it won't be JP Morgan. It won't be BOA even though they're short. They're probably short as a hedge for someone who's buying physical. So what ends up happening is the rehypothecation game, and I say that respectfully, it's a monetary money-making game, dries up. And so we all take our gold out because we want it. Not because we don't trust you. Maybe we don't trust you, but we want it because we're buying our tomatoes with it. And now it's a currency. It's no longer a pet rock. That's the beauty of it. Store of value is a pet rock. It doesn't do anything, right? Well, medium of exchange or settlement medium is a whole different ball game. And it changes. And what it does is it says, I don't need dollars. You'll take silver, right? You walk into a European restaurant, you say, do you take dollars? And they say yes, but let's say they didn't. They're like, well, I need to convert them. Then they take dollars, like, oh, I have money. So that's it. That's my emotional take on it.
Well, based on what you just said there, do you think that partially at least explains why one of these features we've seen here is the open interest in silver has been going down quite a bit, getting close to, I think it even dipped below 120,000 contracts at one point. Meanwhile, as you and I have talked about before, we see the COMEX stockpile dwindling. LBMA, they just had their November numbers out and went from 852 million ounces to 840,000 ounces. Yeah. Are these all connected to basically what you were just getting at?
They're totally connected, and they're connected in multiple ways. Like that's the most obvious way. Well, open interest is going down and silver is leaving the vault. Well, people are making delivery and they're not coming back. That's a fact, right? That's what that means. That's a correlation that you can debate if there's causality there, but there's correlation there. Okay, next level. The market has less participants in it. The open interest is going down. Well, that's also the open interest part, not the silver leaving the vault part. The open interest part going down post Basel III is also consistent with, not necessarily in silver, but in general, is also consistent with a world that's deleveraging on the financial side. You're not going to have 10 contracts. You're going to have 1 contract now. All right. And with regards to the Russia and China thing, well, the financial markets are very Western, and the physical markets, generally speaking, are very Eastern, right? So we have built our financial pyramid, the flower, the inverted pyramid, is it Exeter? I keep thinking Gresham because I was talking about that earlier, right? So the Exeter pyramid is the flower is built on the root, and what's happened is we're in a race to the bottom right now. That's why I think we're going through all this. The West is saying, fine, we'll delever financially and we will take it on the chin. Our people will anyway. But we're not going to use your commodities anymore. And if you have no manufacturing, if you have no entrepreneurship, if you have no financial system, then you're not going to be able to network your raw materials better. So we're going to suffer. You're going to collapse. Without our demand, you're nothing. They're like, without our supply, you're nothing. And so the financial markets, as represented in silver, are shrinking. There's less collateral. from the East. Let's pretend that all the silver's coming out of the East. But what happened is it doesn't have to be silver. It's oil. There's less oil to do deals. And there's less oil to do deals, and there's less contracts. There's less leverage. If there's less contracts, then there's less spreading. If there's less spreading, we can't do our silver to oil trade. Whatever. Somebody's got that trade out there, right? So what ends up happening is you break the financial markets. They shrink. So that's the second thing, right? And the third thing is specific to precious metals. The world is going into a mercantilistic phase. It's going from global to regional. I want my silver here. I want my gold here. I only do trade with my neighbor next door. I borrow sugar from him. I don't want your global sugar. I want this sugar. It's here. It's closer. And there's no poison in it. So what happens is people are either in fear of or having their silver called away or just want it. And so at the commodity level, right? So you've got the open interest is shrinking because people want their silver. Okay, fine. And you've got the open interest is shrinking because of the definancialization of the world, right? The world is ripped apart. There's no Eastern financial business. The West is shrinking. We can't get their commodity, right? And the third reason, although it's all related, is there's physically less silver above ground available. And so the rehypothecation trade closes down. So for all the right reasons, from micro to macro, like there's demand for coins, right? Right? JP Morgan, what did they do? What did they do 6 months ago? They took their gold from their FX account and put it in gold. Why all of a sudden? Don't people understand that there's a reason they're doing this? Why did I'm getting like putting my tinfoil hat on here, but it's right. Why did Germany demand their gold back in 2017? I mean, they didn't get it then. Why did they start the ball rolling? Why did JP Morgan? Because everyone's rolling up their sidewalks and being careful. And that means there's less contracts available. And whoever the poor guy is with the short silver contract, 10 expirations from now, is going to have to make delivery. And they're going to get screwed. That's it. It's happening. It's happening. You don't have to worry anymore. It's happening. Just hopefully we have enough, right?
Well, I like to think so, and hopefully that's what the channel has been helpful doing, at least in terms of pointing some of the things out. And I think we do have a lot of silver holders out there. Although, Vince, one other thing that you did touch on, but perhaps could go into a little more. We saw the central banks buying gold, and you had an article about who would have been actually selling that gold, and I thought that would be good for you to touch on here today.
Yeah, I don't have the answer, so it's still an open question for me, but I'm just going to throw out the list of possibilities. It's a short list, right? Who was buying gold? Well, every Eastern country was, to simplify it. Every BRIC country was, right? Publicly. And the other mystery buyer was China. They took the big chunk out. Who was selling gold? Russia was, right? We know that Russia, we know that Russia was selling gold because of the customs receipts that come into China from Russia. So Russia might have needed a little gold. So to me, when I first asked that question, who was selling the gold, I wanted to know who the weak hand was. Everyone's like, China, so everybody's buying gold. No, they're not buying gold. Someone's selling it. Thing, right? If the price of gold had, let me simplify this. If the price of gold had gone up during the time that the gold was being bought, then that's someone initiating on the buy side. I want to buy it. Buy it. It goes up, right? Well, everyone on the marketing side, and believe me, I'm bullish, but everyone on the marketing side was, oh, someone's buying all this gold. But yeah, but the price of gold went down during that time frame. No one's buying, someone's selling, and someone is catching a falling knife in an orderly fashion. But and there's all kinds of details to get into, but it's like, I don't care who is buying. I care who is selling. Are they done? Do they have more? Are they weak? Are they strong? What do they know? If Warren Buffett is selling Apple, I want to know that. Why? Who was selling? Okay, so the first story that comes out, actually a Zero Hedge post said this is probably one of the three buy. We're talking about the buy side. It was a premium post, one of the 3 or 4 buy sides, and China was near the top of their list. And then some Asian company, some Asian research company, Japanese, I think, uh, uh, ran with it, basically quoted the whole post, right? And then said, we're pretty sure it was China that was buying. So they came out and said it. So the guy came for an analyst that he must have had good information, right? They're out there, they're positioned, right? So now I'm like, okay, so China's buying. So I immediately said, who's selling? Like, China's buying, who's selling? I'm like, well, it's not the US. The US, it's not Canada. It's not any Eastern Europe. Maybe it is an Eastern European country. Maybe it's India. I was thinking maybe India is selling because they're buying all this silver, right? Who knows? Who knows? Maybe they're doing a silver gold trade. Well, it wasn't. It was Russia. It came out a couple of days later. It was Russia selling. I'm like, so now I'm saying to myself, freaking out. I'm going, Russia's the weak hand. The West is winning. I don't have a problem with the West winning, but Russia's the weak hand. Russia's selling their gold to buy tomatoes or oranges or get dollars to buy those things under the table. And I'm like, oh, geez. If Russia's the weak hand, then maybe they're going to sell more. Maybe, and right away I started going, well, the Ukraine war is over. They're going to pull out. Gold's going to get crushed. Russia's going to be like an imploding country. I was like, imagining all this stuff. And so I'm like, okay, Russia's the seller. So is Russia weak or strong? I'm like, well, I don't know. There's a war going on. And then the Ghana news comes out. The Ghana news is somebody who makes diesel oil, distillate, fuel oil. There's only really 3 countries that do that are really big. One of them is us. One of the bigger ones is Russia. Right. So somebody's saying, I may be selling gold to China, but I'm not done buying it. And what does that do? That makes it a currency. Right. I buy gold, I sell. It's like, I'm selling oil, I'm getting gold. I'm using my gold to buy babushkas or whatever it is they wear. Who knows, right? So there you go. And I went, Russia's selling gold, but they're not weak. It's just a trade for them. And so who's the other seller of gold? Everybody in the West. It's a giant sucking sound. The West has been selling gold to the East for 10 years. 10 years. And I have all the proof I need for that. It's not even anecdotal, it's empirical. I have all the proof I need of that. And so if some of the gold came from Russia, where did the rest of it come from? Came from people getting out of their GLD. It came from Western financial investors in gold getting out. So that gold goes to a place where it's never going to be seen again. That's Gresham's law. So the sellers were the weak hands, even Russia, they're the weak hands, right? Because the price went down. But the buyers were stronger. So it's all very supportive of gold and silver.
Well, and there, like you point out, we can see. Go ahead.
Silver's its own animal, and I think silver is more interesting. Gold is more, Zoltan's not writing about silver, right? Silver's more interesting, I think, because I think for the last 2 years, somebody has been reducing their rehypothecation from the Basel III in gold and silver. And gold's in gold the headlines, but silver went backwardated at the EFP. Silver had literally a physical deficit for a period of time. And that means, and silver is not watched by central banks to the point where they restrict you from owning it. Silver's got, speculatively speaking, $26 is not a problem. I think I mentioned it like last month, but technically it's bullish. Physically, it's bullish. And we're in buy season. It's always a bonus when they buy gold. If you're bullish between November and February and they say to buy gold, buy silver. So for all the right reasons, silver's going up. That's it. It's all about silver.
Certainly has been the case lately. And again, as you pointed out, where some of the gold might be coming from, we see these continued withdrawals from SLV and some of the other funds. So quite interesting what you mentioned there, and relevant of where is some of this gold coming from. Perhaps the last thing to touch on is that you mentioned the East is buying gold and the West buying inflation for the most part. And here's something we've seen pop up a little bit in the past couple of weeks with the inflation target of 2%. And here from the Wall Street Journal, it raises the question of why monetary policy should stick to an arbitrary 2% target. Why not 3 or why not 4? And obviously with the Fed meeting coming up in a couple of days, any thoughts on inflation targeting or anything else from the Federal Reserve?
Yeah, I'm going to call it a little Tom Luongo stuff too, right? Because he's right. The Federal Reserve has mandated a 2% inflation target, and that's what they want to do. For whatever reason, it's not doable. Miscalculation of economics. It's not doable without crashing the economy. There's your next bullet. It's not doable without crashing the economy for a period of time. So whether they want to or not, there are now calls coming out. They were coming out for probably 3 months. I wrote about this a couple months ago. I wrote about this in, speculating, but I felt comfortable with it. I said, what do politicians do when they're in a corner and they can't lose face? Well, they come up with a rationalization or justification to move the goalpost, right? The moving goalpost. Well, at 8%, they can't get it down to 2%. At 7%, they can't. Well, they're going to get it all the way down to, I mean, making it up, right? They get it down to 4%, and then they say, this is what I hatched back then. It's like, they get it down to 5%, and then they start to move the bottom up a little bit to make it a little bit easier, because if they lower it too much more, if they reduce inflation too much more in this short of a period of time, you could crash the market. And you're seeing that in housing right now, possibly. So what happens is, and I'll give you the mechanics of it, right? I mean, I'm not responsible for seeing this, but I'm responsible for paying attention after it's pointed out to me. You get a guy, I think his name is Furman. I'm not sure if his name is Furman, but he's at the Brookings Institute. He writes a paper, and the paper is a think tank paper for why you shouldn't use 2% as a target. And he says in a much more articulate way what I've been saying, that you can't get unemployment to 0 and inflation at 2% and not kill the economy. You just can't do it. Can't do it. So either you have to tolerate higher unemployment, structural unemployment, right? But their mandate is 0 unemployment, right? Or you have to tolerate higher inflation. So it's probably a combination of the two. So that was my whole rationale. And he writes, he's got it all done. He's got, based on this data and this, this equilibrium level, inflation's got to go up at 4%, or we're going to have an unemployment rate of 6.5%, and no government wants high unemployment. That's Great Depression stuff. Maybe they should be worried about hyperinflation, but unemployment means riots, means people not working, means 1968 type stuff, and the whole COVID riot stuff. So this Furman person at Brookings comes out with an article with a paper on it, and that's fine. But then you have, right, you do a little detective work, connect the dots. Since the Fed has become more reticent to speak publicly, at least Powell has, he's been using, directly or indirectly, I'm not trying to say his name, Timorous, the Wall Street Journal, and that guy has been kind of his official leaker. And I'm like, okay, Timorous says this, it ends up being right. Zero hedge is all over that stuff, right? That's one of their things. Thank God, right? And then I see Timorous write about Furman, and I go, oh, wait a minute. It makes sense. So it's kind of like you're preparing the groundwork for the increase. I don't know what triggers it. I don't know how it gets triggered, but I can say to you, with 99.99% surety that they will raise the inflation target. When? I don't know when, but they're either going to do it because either A, the markets crap out, right? The markets crap out and they have to raise the inflation target or stop QT. That hasn't happened yet. And it may not happen, right? Or 2, they get it down to 3%, but things start to crack and unemployment goes to 6. The market's okay, but they get it down to 3. I'm fantasizing. They get it down to 4%, and they They know that the next level is just a breaking point for unemployment or something, right? And so they say, we're done. And then they sell it to you. They say, listen, we're going to get inflation at 2%. That's our goal. That hasn't changed. But the intermediate time, we think we need to back off a little bit. And so we're going to be happy with 4% or 3%. And will they ever make it official? I don't know, but that's what they're already operating. They're already operating under the assumption that they can't get it lower than 3%, maybe 4%. And if they do, that'll be a bonus. But I mean, you know, I can. I'm betting my net worth on it, right? They're not going to, and this is the bonus for everyone who's listening. Anyone who's listening. Burns, the Fed chairman before Volcker, he presided over the inflationary expansion, and even if he wanted to be frugal, he couldn't because of the political pressures. So what you're seeing right now, this is where the Tom DeLongo thing comes in, right? Is Burns did a lecture after, this is great stuff, right? Burns did a lecture after he left and Volcker was brought in. And Burns's lecture was, let me tell you why I couldn't stop inflation. And here's why. Political pressure. People wanted to, he didn't say this, but people wanted more handouts. People weren't, you know, it became institutionalized in the expectations. Saving the earth, I kid you not, saving the earth. Like all these things were there, you know, societal changes, fairness. I'm like, and it's legitimate. It's almost like if you weren't a believer in cycles now or crystals, you are by the time this is over. Because it's insane, right? So I read this and I just bullet point, I was like, wow, that's this, that. I'm like, that's then, that's now, that's then, that's now. And I look at this whole thing and I go, I just put it in my mind. I did a post on that as well. I put it in my mind. And now I hear fair and equitable employment, ESG, inflationary pressures. And so if you're a government and you want to get reelected, what are you going to do? You're going to let inflation float higher. You're base your dollar. You're going to depreciate your debt that way, and you're going to do it slowly through financial repression, all these other ways, which basically is saying you're going to just print more money slowly. So the pressures around Powell, who, if Tom is right, is the last bastion of old style capitalists. You know, it's like he doesn't want to capitulate to the whole woke thing. He doesn't want to do it irresponsibly anyway. So he's fighting it, and even if he means it, and I don't think Burns meant it, right? He was just covering his ass after the fact. But even if Powell says, you know what, I don't want to be known as a Burns, I'm going to fight it as much as I can. Either he's gone or he capitulates at some point. And so the inflation rate is going to be kept higher, and we are entering not 1977, we're entering 1972, 1968 maybe, where you have the first spike in inflation and you tame it, and then you say, okay, we've got it down to a reasonable amount, we can take care of it. And you think the fires are out, but the embers are still there. And then you let it go, and either Powell or who would take his place? Lael Brainerd? Is that her name?
Yeah.
Right. She's very MMT oriented, right? And so it's going to be like, and seriously, if there's a gun to my head for in terms of either I make a choice or they pull the trigger, and I have to worry about either A, the risk of hyperinflation or the certainty of mass unemployment and rioting, I'm going to take the risk of hyperinflation. And that's what happened. And that's what's going to happen again until someone else comes in and says, I'm Volcker Jr. So inflation is going to baseline at a higher level for the next 5 to 10 years. I metaphysical certitude, I guarantee it. And that might be okay because the economy will reinvent itself, kind of like we did in the 80s. But it's not going to 2%. It's not going to 2%. I mean, you know, it's not. Sorry. So I don't care if it goes to 2% tomorrow. It's not going away until we change our economy. And even if the war stopped, and even if the supply chains were fixed domestically, right? Half the world is not talking to us. It's a mercantile world. You don't heal these wounds overnight. Anyway, so that's it. Thank you for letting me go on.
Well, I mean, it's quite well said. And, you know, I get it. We haven't had the pivot in 2022. Seems like we'll be seeing a slowdown to 50 basis points yet when you take a step back, whether it's this month or next month, on some of these things, I agree, and I think there's a lot of people who agree that in the end, you're going to see the printing press back. And who knows, maybe we'll somehow be proven wrong yet.
Right.
Certainly a long
Right.
history behind that, and matches a lot of the other things we're seeing when you connect what we talked about earlier in the show with what's happening with gold being used as money again. And then when we see this dynamic here, well, certainly at the very least, setting up for some interesting times. And I would imagine we'll see a fair amount of, I wouldn't say this being resolved in 2023, but come further to the surface. So sure appreciate everything you shared there. And Vince, perhaps you could let folks know a little bit about your site, Goldfix Substack, where you write about this on a daily basis in great detail. Especially, I know you have a lot of active traders in there. So could you just let folks know a little bit more about that?
Yeah. Thank you. VBL Goldfix Substack is the site, and it's basically three types of content. One type is research. Whether it be an analysis of a bank's report, sometimes including the actual bank report for premium subscribers, or whether it be for active traders. I have a partnership with Michael Moore. He's a professional, renowned professional technician who I've been working with when I was his client for over 10 years. And some of that's the more active stuff. And then there's just some other pieces there that are on macroeconomics and things like that. Like for example, the first look Zoltan on golden oil. That's basically, I got it on the 5th, right? I was lucky enough to get it on the 5th, and I put it up on the 6th, and gave them the paragraph that we were talking about. That was the paragraph people were caring about. And they also had the opportunity to view the PDF as well in there, as well as other reports. But it started out as a almost a hobby. I was working with Larry Benedict for a period of time, and Larry Benedict's one of the original market wizards, and he wanted to do this trading community. I said, well, I'll do something. I go, what do you got? I got oil. He goes, I go, oh, well, I'll do gold. So that's how the gold fix started. And he stopped doing what he's doing, but this continued on. And been a lot of fun. It is a growing publication. I'm not going to be falsely modest, but I'm not really that good at self-promoting, except to say, there's some things I get right, and there's some things that I'm like, okay, I'll just put it out there, and maybe people will appreciate it, like Michael's stuff. So if anybody wants to subscribe for free, that's fine. You'll probably get an email a day. If anybody wishes or has the desire to try it out premium, you can do it for a week for free. And then just make sure you cancel it if you don't like it. But if you do like it and you come in through Arcadia and Chris, there'll be a substantial discount. So that's it.
Well, I sure appreciate that, and I enjoy reading it every day. And certainly, I think throughout the last hour, you've shared a lot of the type of material that you put in there. So unfortunately, we can't have Vince on every day on the show, but you can find him at vblgoldfix.substack.com. And again, link to that in the description field below. So Vince, the Professor Lanci, I thank you again for everything you've shared here today, and just helping people to understand what's going on behind the scenes of some of the things that are happening out there. And nice to see this in the midst of a gold and silver rally over the last couple of months, and great to have an idea of where things are headed going forward. So appreciate everything you're doing, and we'll have to catch up and do this again soon.
Thank you for having me on. Just a quick comment, if I may. First of all, a shout out to Rafi, because I enjoyed watching him, and I think we've connected on Twitter as well. He's a sharp guy, and also I really enjoyed your Silverfest. It's an evergreen video format. I think people should watch it. Anyway, I liked it a lot. So.
Well, I appreciate that. I appreciate you being a part of it. So was just nice to get a lot of different people involved and provide different perspectives, and just give people information so they can decide what feels right to them. And either case, thank you again for everything that you're doing out there, Vince. I sure appreciate it, and we look forward to seeing you again soon, my friend.
See you at $26.
Well, thank you to Vince for everything that he shared there. Hope that was helpful for you at home, and certainly fascinating times out there with what's going on in gold and silver, with inventories coming down in silver and gold being used more as money and more as leverage amongst some of the various countries that continue to de-dollarize. So hope that was insightful and gave you a better picture into the great, brilliant mind of Vince the Professor Lanci. And before we wrap up, I would like to thank Reyna Silver, who brought us today's show. Reyna, that has its Gigi and Batopilas projects in Mexico, where it is exploring high grade district scale assets that are large enough and high grade enough to withstand just about any silver price environment. Obviously, if we do continue to see a rise in the silver prices in 2023 and beyond, certainly would be good news, yet a good model that they're looking for, that they can be profitable throughout a range of silver price environments. And while they have already done a lot of drilling at Gigi and Batopilas, they are currently drilling at Medicine Springs, their third asset in Nevada, which has shown 10 of the 13 signs of a carbonate replacement deposit. And to hear a little bit more about that from Dr. Peter McGaw, who is one of the most well-renowned geologists for finding silver in Mexico, here's a little bit about what he had to say about the project.
Welcome to Reyna Silver's Medicine Springs project. We are in the middle of the Medicine Springs topographic sheet, which is evidently where the name came from. This is a carbonate replacement exploration target. Very early stage. There's a little bit of historic mining, probably not more than 25 or 30,000 tons total between these small mines, but they got exactly the right kind of thing that we're looking for historically. High-grade silver mineralization with lead and zinc associated with jasperoid, which is a form of high silica alteration that forms very resistant knobs that weather out in strong contrast to the rocks surrounding them.
So thank you to Reyna Silver for bringing us today's call with Vince. And to find out a little bit more about how things have been going since they've begun their drilling at Medicine Springs, well, here's a call I recently did with Lauren McGaw of Reyna, where she talks about that, provides some details. And I think you'll find that one helpful, and it's coming your way now.